Charlie Munger, who's 98 years old, is without a doubt among the greatest people alive right now. From a young man who merely dreamed of financial independence, he has now worked with Warren Buffett to become not only a multi-billionaire, but also one of the best value investors the world has ever seen. For this reason, when it was revealed that he was investing in the Chinese tech giant Alibaba in the first quarter of 2021, people took notice. The financial world paused to pay attention. He began purchasing shares in the low 200s, and when Alibaba continued to decline, he continued to purchase until he nearly doubled his position in the third quarter of 2021, and again doubled it in Q4. Charlie was figuratively doubling down on this bet when in the first quarter of 2022, something unexpected happened. Charlie's 13F revealed that he had, in reality, cut half of his Alibaba position, giving us the shock of the century. He liquidated 302,060 shares, or 50.17% of his holdings. This really sparked the rumors. Was he merely reaping tax losses, or did he simply acknowledge that he had made a serious inaccuracy? Hey, welcome to Stock Market Mate. Today we'll talk about Charlie Munger's call on Alibaba stocks. Before we get into it, subscribe to the channel and hit that notification bell to help us beat the YouTube algorithm. If you're done with that, then let's get right into it. Charlie Munger just last week published his revised 13F for the second quarter of 2022. We believe we may finally have a definitive response. We mean this is the kindest manner imaginable when we say that Charlie Munger is the master of doing nothing. Waiting constitutes 99% of his investment. One of his most famous quotes is, "You don't make money when you buy, and you don't make money when you sell. You make money when you wait." Charlie is a patient expert who can go for extended stretches without taking any action. For instance, his most recent portfolio activity prior to purchasing Alibaba in 2021 was purchasing shares of POSCO in 2014. So when you see Charlie doing nothing, it really means all is well. If we take a look at his Q2 13F filing, he did absolutely nothing. By the way, we do think Charlie still manages the portfolio for the Daily Journal Corporation, if you're wondering. Charlie indeed resigned this year as chairman of the Daily Journal Corporation, but he plans to continue serving on the board. However, in that filing, the Daily Journal noted that Munger intends to remain on the board and to continue pay particular attention to matters, which he has been involved in the past, including the company's securities portfolio. So we think, long story short, the 13F filings still do give us an insight into what Charlie's thinking. As we previously stated, nothing at all, neither buying nor selling, can be seen in his Q2 2022 13F filing. And despite the lack of activity, we believe that this provides us with all the information we require regarding Charlie's viewpoints regarding Alibaba. In other words, he believes it to be a good company and wants to cling to it for the long haul. We are positive that Charlie would not have stopped selling at 50% if he had truly believed he had made a mistake in this one. He's not that kind of an investor. We would have witnessed this filing if he had wished to leave. To be honest, this information fits up well with what Charlie has already mentioned about, say, Alibaba reducing 100. As a refresher, we want to play everything he said on China and Alibaba on the 17th of February this year. Take a listen to what he was saying.
When you buy Alibaba, you do get a sort of a derivative, but assuming there's a reasonable honor among civilized nations, that risk doesn't seem all that big to me. We did it for a very simple reason. We got more strength per dollar invested. In China, the companies we invest in are stronger relative to their competition and priced lower. Warren, like many other intelligent people, likes to invest where he's personally comfortable. And for some reason, I'm more comfortable with the Chinese than he is. That's a minor difference, but I have all kinds of places where I'm just like Warren. I have all kinds of things where I'm not comfortable. I think an old guy is entitled to invest where he wants to invest. I don't think Alibaba is as entrenched as something like Apple and Alphabet. I think the internet is going to be a very competitive place, even if you're a big internet.
As we have mentioned, this happened on February 17. That is precisely halfway through the quarter when he cut his investment in Alibaba by 50%. We don't hear anyone in those tapes suddenly turning pessimistic about their most recent stock purchase. This, along with the fact that Charlie stopped selling in Q2, and the fact that none of us believe Charlie is to be a hypocrite, demonstrate that Charlie was only harvesting tax losses in Q1. So what exactly does that mean? If you didn't know, you can lock in capital losses to reduce the tax you pay on future capital gains in many nations throughout the world. In order to lower their tax liability, many investors who are generating large profits may therefore attempt to lock in losses on positions they are currently down on. That is Charlie Munger's stance on Alibaba. To be really honest, we believe that he made this investment with a time horizon that is actually longer than he believes he will live. This one will be a long-term hold for the Daily Journal Corporation. We believe that individuals are aware of this with their type of investments and others. On the other hand, we don't want this to appear to be an Alibaba promotional video. Additionally, just because Charlie Munger appears to be holding on to this one for the long run doesn't automatically mean that it's the perfect choice for you. As you have seen, the stock has undoubtedly been very volatile. In just 12 months, the stock has both fallen by 62% and risen 42%. That's because, as we know, there have been a few volatile issues with Chinese stocks at the present time. They've recently announced that they intend to get that over and done with sooner, rather than later. However, it is still a long-term risk with the way that their government likes to control their economy. That's about it for today's video. If you found this video helpful, click the like and subscribe button. Also, you might want to leave a comment below. We love hearing from you. Thank you for watching, and we'll see you in the next video.
If you enjoyed this video, you're going to want to watch one of these two videos right here. Enjoy!